This is Commodity Wrap. I'm Tony St. James, and welcome to a Wednesday. Our special guest today is Brian Hoops. Brian is President, Midwest Market Solutions. Brian, the Wednesday trade. Really, at the end of the day, it's almost as if the market took a nap. Lower for corn, soybeans lower, wheat mixed, cotton kind of mixed as well, and for anything that looked like we might take off one direction or the other, just kind of fell asleep at the end. Is that one way to put it?
Kind of seems that way. A lot of times these markets will not end how we start the morning off. So a lot of times what we talk about early in the morning and what could be driving things, they tend to fade one way or another. Maybe sometimes they get better, sometimes they get worse. And today it seemed like most of those gray markets got quite a bit worse by the closing bell. Caveat to that would be the crude oil market, which was stronger early and has really exploded higher here as we get into this closing bell.
Well, I'm glad you brought the crude market in, because is that tied to the headlines of the U.S. and China agreeing to a framework to move forward with trade, or is there something else there?
Yeah, I sure thought it was mostly to do with the China news as far as optimism over that agreement and having a framework in place, and that would open up our export markets even further to China. We did have an EIA report out this morning, and that seemed to kind of even open that door a little bit stronger, because inventories were shown as a drawdown of 3.6 million barrels, and trade that was more than trade expected. They were looking for about 2.6 million, so quite a bit more than expected. A pretty good drawdown, and really ever since that report was released at about 9:30 Central Time, crude oil has steadily moved higher until we're now almost 5% higher on the day.
So is that enough news to kind of pull soy oil higher as well when meal and beans go lower?
I think if we're looking at a disappointment, which would be the opposite of what we're talking about in crude, it's the soybeans and soy complex. You would have thought that if we get some trade agreement with China, that beans would be a major benefactor to that, and that really didn't transpire into prices today anyway. We were looking at over 7-cent losses in July soybeans, soybean meal lower as well, and the only thing that really closed higher was soybean oil, but it was just a few ticks higher. It wasn't anything stronger. So I think overall just a disappointing day of grain trade. You have a report out tomorrow that I think it won't be bullish by any means to the corn, but it could be supportive to old crop balance sheets and new crop balance sheets for that matter. But you also have South American supplies that will be updated simultaneously, and I would expect they increase the production of Brazil's corn crop in tomorrow's report.
Okay. You mentioned the reports. We actually get a couple of reports. We'll start the morning with the weekly export sales report. Really kind of looking in the rearview mirror. Of course, a WASDE report is pretty much the same thing as well, looking at world ag supply demand estimates. Any other thoughts on either one of those before we get to those reports on Thursday?
Yeah, exports probably going to be very mutely traded. I don't think it's going to make much difference one way or the other. Trade, if anything, we'll be looking at wheat market for the exports, as we've been red hot as far as our wheat sales go for this marketing year. As of last Thursday, we were the best start to a new crop marketing year in the last 12 years. So wheat's really doing great. Soybeans new crop sales, we started off a dismal pace last year, and we're right in line with last year's very dismal pace. We hardly have anything on the books. And as far as corn sales go, most of that has been loaded here on the old crop contracts. Not so much new crop contracts, but a lot of old crop corn has been sold. But again, that may start to slow down as we get South American supplies starting to be harvested, particularly out of Safrinha, Brazil, corn growing areas.
All right, I'll throw couple more things in here before we go to break, and kind of interesting. Don't know how they factor into everything, but EIA data for the week ending June 6th, showing ethanol production scaling up 1.4%, record 47.04 million gallons per day. And could this be adding to some strength over in the energy markets? GM investing $4 billion in U.S. production. They're moving back to the U.S. from some of their plants in Mexico, and they're actually taking an EV, an electric vehicle plant, and converting it back to combustible engine production. Kind of interesting. Won't happen until 2027, but something to keep in the back of your mind. It's a Wednesday. This is Commodity Wrap. This is Commodity Wrap. I'm Tony St. James. We're joined today by Brian Hoops. Brian is president of Midwest Market Solutions. Our first segment, we talked about the row crops through the energy markets in there, and I just kind of mentioned it seemed kind of quiet towards the end. However, market that really hasn't been very quiet, you look at the movements we've seen in the past week, for example, in the hog market. Pretty impressive. And you look at what the hog market's done in the past month, up 13%. That's pretty impressive. Hogs ending the session higher on Wednesday. Live cattle in the red, and then mixed trade over in the live cattle, feeder cattle were lower. And you look at that, Brian, what are your thoughts?
Real unimpressive grain trade as we talked, but the livestock trade, very volatile early in the session. A lot of rumors affecting this cattle market last couple days. I think back to last Tuesday, we had a rumor unsubstantiated about new screw worms found in Missouri, and that turned out to be a false rumor. And after that, we digested that. We took off and rallied. Yesterday we heard some rumors, maybe some plants closing in Colorado for some maintenance, but yet that same plant was out bidding for cattle last night in Kansas. I have heard that Colorado plant could be closed for just a few days for some repairs. There was not a processing plant, but meat processing facilities in Nebraska being raided by ICE agents. All this is kind of left the trade a little bit nervous. What would happen, especially if we reduce some of our capacity to kill some of these animals? And that is, I think, given us some profit taking on a lot of the contracts in here. Now, longer-term fundamentals, I think, still remain very strong. Our box beef at midday was stronger. Our feeder cattle index is stronger. The fact that packers are out knocking on doors on a Tuesday trying to find cattle tells us supplies are extremely tight. And if we have a cattle on feed report a week from this Friday, that's going to tell us that same thing. These numbers are going to be very tight, continue to be tight, and until the consumer starts to back off of their demand, until the packers start to slow kill speeds or close plants, we're probably going to try and continue to push this cattle market higher. But I do expect some very volatile price swings, seemingly what we've seen the last couple of days, that could happen from time to time here in this cattle market.
Okay, cash cattle again, 235 in Texas to start the trade for the week. We've heard some bids moving higher than that. And again, we can sit back and question, are we at the highs? Are the highs right around the corner? But how many of us thought the highs were in a month and a half, 2 months ago? So we're not going to pick a high on in this market. Is there still a way to work your way through a market like this?
Yeah, you're absolutely correct. No one is going to be able to pick a high in this market. You can't pick the lows, can't pick the highs, but a lot of people are going to try in here. The best thing that I think producers can do, and what we've been advocating, is because these supplies are so tight, because the fundamentals are still bullish, protect yourself with some options. It's like buying in price insurance. That's the way to go in here. It's trying to straight future sell into these markets. It can be effective, but it can be very, very costly, very, very draining on your pocketbook until we get that top in the market. You pick the wrong day to sell, and the market moves $10, $12 against you. It can really add up, and it's better off, I think, to be buying some insurance and letting prices try and move higher if you need to have some downside protection.
Okay. Again, we cover quite a few commodities here. What about the equity markets? We talk equity, Dow, Nasdaq, S&P. Have you kept an eye on that?
I was real disappointed with the performance of the stock market, the S&Ps today. We had CPI numbers out this morning that showed very small uptick in inflation, 0.1%, and trade was expecting larger than that, 0.2%. That very, very small tick in inflation tells us that this economy is strong. There is no inflation to speak of, and it would be even stronger if we lowered interest rates. And so I think there's pressure against the Fed to lower interest rates. We know President Trump wants the Fed to lower interest rates, and he's going to continue to put that pressure out there, wanting these interest rates lowered because it would be good for our economy. And at this point, it's hard to imagine a reason why the Fed is not taking action as far as lowering rates, because all of the reports that we have, the CPI, the PPI numbers for months now have been very positive, telling us that inflation is under control, the tariffs are not adding inflation, and hopefully we are about done talking about tariffs, as maybe China has reached an agreement, maybe some other countries as well.
All right, Brian, if we want to talk one-on-one, where do we find you?
Well, yeah, you can find us on our website, which is MidwestMarketSolutions.com. That has a list of all of our offices and their phone numbers. Direct number for me is 417-501-5132.